Good morning, everyone. I'm David Talbot, Managing Director and Head of Research here at Red Cloud Securities. I am pleased to invite Roger Lemaitre, President and CEO of UEX, to the podium. UEX hosts about 150 million pounds of uranium across several highly prospective projects in the Athabasca Basin. So, Roger, you're going to have about, let's say, 10 to 12 minutes, and then we'll have a few questions at the end for Q&A. And attendees, please feel free to use to ask any questions using the Q&A link. So go ahead, Roger.
Well, thank you very much, and thank for inviting us here, David, today. Really always glad to be able to speak at a Red Cloud event. And thank you for everybody for participating today and hearing what we have to say. 10 minutes isn't a long time for what I consider to be a little more complex story than maybe you'll see from some of the other companies you'll hear from today. We're, with our recent transaction of acquisition of JCU, of 50% of JCU, we're evolving into a long-term sustainable uranium producer. And we were already on that path. The acquisition of JCU just puts us even quickly further on that path. We do have some forward-looking statements here, so please keep that in mind as we go forward. We're more of a one-of-a-kind uranium junior. We're a portfolio of assets unto itself. And sort of 6 key things I'd like you to take note of about our company compared to, say, some of our peers. We have the potential to evolve into a low-cost, multi-sourced uranium producer. We have, as David already mentioned, very resourceful with almost 150 million pounds of historical and 43-101 resources in the portfolio. We're going to be sustainable over the long term because of the portfolio. But we also have maybe, compared to a lot of development companies, some advanced growth upside that we can focus on in the short term, and I'll get into that. Compare the value to our peers, it's very compelling. And then the team here, what we have is the correct team for where we are right now, and I'll talk a little bit about that. We're a unique uranium investment because you're not just investing in a single project or a portfolio of grassroots projects. We're looking at 5 development-ready projects, 3 resource, 4 mid-stage projects. Those are pipeline projects where there would be flagships for a lot of smaller companies. They'll help us sustain ourselves as we move these development projects through production or participate with our partners to do so. Like I said, almost 150 million pounds of resources, which is pretty unique in the space. And I think when you're looking at an investment, and we'll get into why that's valuable. At the end of the day, most of the uranium companies you can look at today will have some grassroots projects or they'll be in development ready stories. And UX has both of those in our portfolio. Our cost of holding our portfolio is next to nothing, to be honest with you. The properties are in good standing for a very long period of time. Where we shine now with the acquisition of JCU is we have 3 projects that are in that development ready pipeline, of which Wheeler River, Millennium, and Kigavik. We have projects that are on the cusp of development ready, with the market needing a little bit maybe more incentive price-wise to move them forward. But we shine in that resource and mid-stage portfolio, which would be flagship projects for most companies in our peer group. Why we shine in that thing is because they have multiple targets at Hidden Bay, for example, 12 alone, that are hot spots that could be turned into the next uranium deposit discovery. And what you have in UEX is the opportunity to participate in development as an investor, participate in grassroots exploration, but also probably more importantly is participate in new discoveries. Because we're not operating those first 3 development projects, we can put our resources and time into new discoveries at the mid-stage and resource level category, where the risks for new exploration success via discovery are probably lower. A little bit about us. Amazing what a week will do for in the uranium space in October and September. Today we're trading at about 53 cents, close to 44 cents, and we're a $270-odd million market cap company. Our cash position is about $5 million. And we're in a good spot to get through the end of next year. This doesn't include the cash that we inherited when we bought JCU, which has got enough cash in it to sustain that company for well into the end of 2022. So cash-wise, we're in a very good spot, and we have all the key funds like Segra, Extract, Tribeca, and M2Cap as our as key shareholders going forward. The acquisition of JCU took the fairly large company and turned it into from a resource holding point of view, and turned it into a much larger company. You can see here we're the 5th largest by resources in the space. We have more resources than all the US ISR producers do. While we're number 3 in the Athabasca Basin, it's still pretty substantial. But when you compare ourselves in terms of a market cap per pound basis, whether it's the US producers, the Athabasca developers or the global developers. On a market cap per pound basis, there's still a lot of room to move. Granted, this is at our 44-cent valuation, but relative market values over the last week have changed pretty similar. I don't really want to talk a whole lot about the uranium sector. You're going to hear some expert people talking to you today about it. I think two things probably just to put out forward is whether you're the most pessimistic uranium person out there thinking that a supply gap is coming in 2024, 2025, 2027, or whether you're most optimistic saying we're already there. There's no doubt that the Sprott Fund is pushing people's perception forward that supply shortfalls coming sooner than later, and it's changing the perception of uranium buyers, most particularly and most importantly, the utilities, and making them question whether there's pounds there. We saw the market go into backwardation 2 weeks ago for the first time since 2006. When the sort of like flood happened, and the Sprott buying, not only just buying pounds, but buying a lot of the small pound allotments is really mopping things up and changing perceptions. And I'll let other people talk a little more about that. With UEX, we have ownership stake, probably the most important thing is 6 of the next 10 likely development uranium projects in Canada, with the next 3 of the next 6 tier 1 projects and 3 of the next 4 what I call tier 2 projects, which may go this cycle but are likely to go in the next cycle. And what that does for our shareholders is give you that benefit exposure to that uranium development. But because we're not the operator, it allows us to put some of our time and resources and money, because we're not having to put 100% of our resources into development project, to focus on growth through new discovery. And if you've seen some of the previous presentations we've done, no matter what part of the cycle you are in, the up, the down, the sideways, new discovery is the greatest value generator for shareholders. And you want that exposure. Our development ready projects, 4 of them across the Athabasca Basin, and the one in Kegavik. Wheeler River, we just, with Denison and us, just announced a feasibility study here at the end of September. 135 million pound resource there. We're calling it historical because we don't have a 43-101 on it. We own 5% of that. The PFS in 2018 showed very active economics. Millennium is Cameco's next development project after Cigar Lake. Large resource, been through some of the project permitting process already. Kegavik, 5 of deposits are in the resource of 133 million, historical resource 133 million pounds. It's got 5 other deposits that have yet to be put into the resource category. And it's been through the permitting stage, and we think it will move forward relatively quickly when it's resurrected. Shade Creek, we think, is probably the greatest brownfields exploration project in the Athabasca Basin. 4 known deposits and counting, and 50% of the resource in the basement. Horseshoe Raven is our Rodney Dangerfield in the uranium world. Plunk this down anywhere else in the world, people will be really excited. It doesn't have the grades or the size of some of these projects that you've seen in the basin, but pound for pound, on a cost per basis, it's very, very competitive. And those projects will move forward when the price of uranium signals that need. Our resource level projects, we think Shade Creek, which said we've identified 10 areas under the footprint of the deposit where they can, similar environment to where Canada, which was 50% of the resource, exists. We think with modest budgets there, we can grow that pretty substantially. Wheeler River, we're already talking about the K West discovery that they announced in Denison last year. That's going to be worked on hopefully over the next couple of years. And Christie Lake, our on strike McArthur River, 10% of the property been explored, and much of the trend is yet to be tappable drilling. We think there's great growth potential there. And so, we also have West Bear, our cobalt nickel deposit. We have 1 deposit resource, a brand new one found here this year. We've been dabbling in cobalt and still looking to extract value for shareholders when we get the right deal in place. Our mid-stage portfolio, where we have strength, we're across the key parts of the Athabasca Basin. Hidden Bay, we would say, is probably one of the best basin-hosted uranium deposit potential terrains in the basin. And a huge grassroots portfolio of opportunities that we're not the majority operator in most of these, and most of them are operated by the big major players, Cameco and Orano, and then Denison as well, but very well positioned, as you can see. So over the next few years, our short-term growth or potential opportunities will be with the Wheeler River development, growing our resource base on our key projects, but also at Shade Creek, extracting value for the cobalt, and looking for ways to expand activities on our grassroots projects, which we think in the recent market push, that's there. Longer term, we'll be working at Millennium and Kegavik and continue to look at other opportunities across the basin. Our board, been there, done that for a company like us. Graham Thody's been here since the beginning of the company's inception. Peter Natepsky is our most recent addition. He's the corporate dev at Agnico Eagle. All the experiences that you want to have in a junior company our size. Our management team, similar, a lot of years in the uranium experience, or in Evelyn's case, a lot of years running junior companies. But I think probably more than anything else, this team knows how to find things. This team has 7 deposit discoveries under, either with UX or in our previous lives at other companies, and pioneering new type of cobalt discoveries. This team, not a lot of years of experience, but a lot of years of success. So with that, just checking the boxes of the key things that we talked about up front: potential to become a low-cost multi-source uranium supplier, a lot of resources, sustainable because they're not all happening at once. We may not become a Cameco size producer, but certainly a couple million to pound a year producing potential for a long period is there. Growth upside, value potential, and the right team. And key things going forward: Christie Lake drill program's just finished up. We're looking at the cobalt positioning, looking for new partnerships for our undervalued portion of the portfolio, our grassroots portfolio, and I think the market's there now to be able to do that. And we have feasibility studies on the go. So with that, David, I'll turn it back to you to throw in any questions you might have.
Okay, great. Thank you, Roger. Rightly or wrongly, I think the market almost values 1 or 2 projects. You've got a lot of projects, a lot of large, high-grade projects, and near-term production potential at Wheeler River as well, but you aren't the operator there. Would you call anything your flagship asset, or what would you be specifically focused on right now?
Well, I would say that with a 5% indirect stake, while Wheeler River is a real value driver for us, it's probably not where our focus will be, because we're the passive group in that particular investment. So our focus will be on Shake Creek, Christie Lake, and probably pieces of Hidden Bay. Our cobalt assets we're still looking for that right partnership, for sure. And then I think what's different now than has been maybe in the past, with the uranium market interest being up significantly, we can vend out projects at the grassroots level to get more of our portfolio working and see more value. And we could have done that over the last several years, but it's a question of whether or not the companies that are vending in are sustainable. And the incumbent players in the basin they've been holding on with their fingernails, just trying to survive. And they're probably with their own flagship projects. So they when now that the market is better, they're able to put investments in those, and they're not interested in some of our other projects potentially. So new entrants into the space that are fundable now is something that hasn't happened for probably the last 10 years, but is possible today.
Yeah, but you need them fundable in 5 years, 10 years as well, or at least 3 years, 5 years. So.
Well, we'll have to answer a few questions on these projects.
Yeah, fair enough. So do you foresee Millennium or even perhaps Kigavik being advanced here as uranium prices rise? What uranium prices might be required for some of these projects to get up and running?
I think if you look at Millennium, and Cameco's clearly the driver on that one. So you have to sort of look at Cameco's guidance on things. And of course, McArthur River will be number 1 in their portfolio to go forward. But Cigar Lake comes to the end of its life at the end of the 2028. And they're going to need something to replace it. They can choose Cigar Phase 2, which will give them a couple more years up at Cigar Lake. We think Millennium is their next development project per se, and from a cost point of view. So we don't foresee it starting next year or maybe the year after, but starting in 2026, 7, 8, we see potential for ramp up there. When it comes to Kigavik, we look at Orano's portfolio. It doesn't take a lot of poking around to see what they have in their portfolio of opportunities to sustain themselves also after Cigar Lake. And so I think that's probably a longer term project that's probably in the early 2030s.
Okay. So you mentioned maybe Millennium and then obviously Wheeler River moving forward. Will UX have to put up any cash into these projects in the short term?
For the next year, the answer is no. That money is already in JCU's portfolio. So we're good through the end of next year. Yes, we'll have to put some money up for development in Wheeler River going in the future. But if you look at the pre-feasibility study for Phoenix, they had a $322 million CapEx. We're in for 5% of that, or about $15 million. So I don't find it tremendously onerous for us to keep up our CapEx there.
Great. Okay. Well, thank you very much, Roger. Thank you for everybody joining us today. Up next, we have Neo Lithium Corporation.
Thank you, guys, and thanks for your time.